Sensex and Nifty extend opening gains to end at new record highs. Mid-cap index recoups yesterday's losses and outperforms the large caps today.
Commodity prices continue to surge. Copper hits a 14-month high. Gold is at a record high. Silver at a 3-year high. The Shanghai Exchange imposes trade limits on gold, crude and copper futures.
After a nudge from SEBI, mutual fund inflows shift from mid-caps and small caps to large caps. Small cap funds see an outflow for the first time this financial year in March, that's in the month of March. And large cap inflows are some of the highest we've seen in a year or so. Inflows into small cap funds for FY24 nearly doubles to more than 40,000 crore rupees despite the outflow that we saw last month. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as we key up for the next trading session, which is not tomorrow, which is the day after, that is Friday. I am Prashant, with me, my colleague Surabhi. Surabhi, hi.
Hi Prashant, I guess that's an important cue. Not that the bulls will complain, even if they were trading tomorrow, they'd be very, very happy considering how the market marches on, how levels are coming and going. And today we have 22,750 on the board.
I mean, what can we say, right? Every day, new records and the move just continuing. And I think the market pushed higher right from the word go this morning. I mean, the GIFT Nifty was indicative. Actually, the start was pretty similar to yesterday, but the close is completely different. The start was 70, 80 points up. But yesterday, it all fizzled out by close. We had an absolutely flat close. But today, if anything, we built on it. It looked much better. I mean, it looked like we would end about 150 points higher. But then there was a little bit of pullback which came through. But can't complain. Overall, I mean, I think it's a very good session that we've had today. Metals and PSUs, right? And of course, it's a combination of, if it's a combination of both, even better. Actually, the entire resources space, maybe that is a better, wider basket to use. That's the pack which did very well. We'll get to stocks in just a bit. Mid-caps and small cap indices, last 2 days, a bit of underperformance, but not today. The question, of course, tonight when we come back on Friday morning is, will markets be looking very different, up or down? Because you have the US CPI numbers later tonight. And if you look at the last 6 months, that number has had an impact on markets in a significant way. So we'll see, we'll get that data point around the time the US markets open. Of course, here, markets are shut, so we enjoy the holiday tomorrow and come back on Friday morning. But so there'll be lots of action, especially in the PSU metal space.
Absolutely. I think, metals, commodities in general, that's where the action has been, and more of it on the green side than the red side. But what was also working for the market is that, once again, banks are in step with this party. There's that underperformance of banks that we were always talking about for the better part of February and most of March. That has changed in April, and that's a big, big change. So today, the bank Nifty was up again about 0.5%, very much in step with the Nifty. And the broader market celebration, that also continues. The mid-cap index was actually outshining its larger peers with a gain of nearly 1%. Good advance decline ratio, solid market breadth as well. So you had about 1,250 stocks advancing and just about 1,000 stocks on the declining side. Another thing that's really working for the market in the last couple of days is Reliance Industries, because that stock has decided now to not underperform and be a drag on the downside. Today, a second day running, Reliance was contributing to the green side of the screen. That, along with a couple of other heavyweights like, as I mentioned, banks, SBI, etc., ITC. These were large cap stocks that were taking things higher. Of course, we'll tell you more about the individual stock action and all the sectoral trends as we go along. So let's get to the lineup that we have in store for you today. We'll start off with a deeper dive into the day's movers and shakers, all the newsmakers, and of course the sectoral trends as well with Vivek. The sector of the day has to be commodities today. Gold, silver, cocoa, all commodities hitting new records. Metal stocks continue to shine as well as prices remain elevated. So we'll talk about this as we go forward. Some of the stocks that gained include Vedanta. That's, of course, twin impact, metal prices higher, plus bullish brokerage commentary coming in. The other one is MCX, where there was a bullish note that helps take the stock higher. And then, of course, we talk about, a lot of the reasons why these stocks were in focus today. D Street chatter then comes up. Nimesh is going to talk about IEX and why that stock was in focus in today's trading session. And then, as always, we will deep dive into all the events to watch out for, not tomorrow, but for when we come back after the midweek break. But first up, let's head across to Vivek. Vivek, once again, a very, very green-looking screen.
Good afternoon. Can't complain, in the way the market has been doing. One sector that you actually focused on was the entire commodity pack. And the first stock today, is one that is best placed to benefit from the entire commodity upcycle. So the first stock on the radar in terms of the gainers, of course, was Vedanta. We also saw an upgrade coming in from CLSA on this particular stock. They've upgraded the stock to a buy from an underperform rating. And on the back of that stock today, up 7%. The next stock, again, one particular stock, that actually has quite a bit of exposure to the entire iron ore pricing trends. A couple of notes have started indicating that iron ore pricing may be rebounding from the current lows, and on the back of that, NMDC today up by over 5.5%. One particular pocket, after a while that saw buying activity across the board was the entire agrochemical space. So have a look at names like UPL, GNFC, Aarti Industries, Tata Chem, Atul, and along with that, a whole host of other chemical as well as agro stocks actually did quite well in the session today. You did mention a whole host of PSC stocks. OMCs were one that did quite well. They were recent underperformers on the back of rising crude prices, but today all of them did well, and also names like Coal India, ONGC, these two contributed to the gains. The other stock on the radar, from the broader end of the market was Protein eGov. You did see a large block deal happen over there. 361, this particular fund actually exited a certain proportion of its stake, but after that particular deal, stock recovered quite sharply in the session. Two stocks that gained on the back of brokerage notes. First one was Kolte Patil. Motilal Oswal initiated coverage on the stock. They have quite a bullish target. That stock surged in the session today. And MCX, Motilal Oswal, again, increasing target price. They've also said that, the average daily turnover for MCX will surge significantly. And that also, they believe, will be a significant growth driver of stock higher by over 4.5%. Very few stocks in the red. First stock on the radar, IRB Infra. Some negative news flow coming in over there. The stock managed to recover towards the end of the day, but an arbitration award going against the company stock ended in the red on the back of that. Cipla, CNBC TV18 managed to access the Form 483 that was issued to the company's Patalganga unit. On the back of that, stock saw some selling pressure. And the last stock, again from the pharma pack, Spark, Sun Pharma Advanced. The company actually was quite optimistic about being able to develop a drug for the treatment of Parkinson's, but the primary endpoint for this particular study was not met. On the back of that, stock ended at the lower circuit.
Okay, a nice summary, Vivek. Thank you very much, as always, for that. We have Mayuresh Joshi now joining in, Velim O'Neill. Shrikant Chouhan of Kotak Securities is also with us to get a both funda techie perspective. Gentlemen, good afternoon. Good to have you here. Shrikant, just sort of analyze the price action for us. What are the targets? I mean, should we have targets here? We're at highs, so you have to use some extensions, etc. Just your thoughts.
I think, for Nifty, it is already into new highs, and it is consistently forming a higher top, higher bottom series after crossing the level of 22,500, which was something I can say very difficult to cross, but the Nifty managed to surpass the same. And now on every decline, on every dip, we are seeing good amount of buying support for the Nifty as well as for the Bank Nifty. Today also, after opening little higher, we saw sideways sort of activity and it moved higher. So one thing is very clear, that the markets are now heading towards those levels where there is huge amount of option interest. So around 23,000 we are expecting Nifty to reach in next few trading sessions. In case if there is any again correction, I think now the supports have shifted to 22,600 levels. So now 22,600 should be the final stop loss for holding any long positions on Nifty. For Bank Nifty, there also we are seeing equal amount of strength. But this time, I am of the view that private banks are still below their previous all-time highest level. So Bank Nifty has already crossed its high. PSU banks is already into new highs, but private bank is still trading below the highest point of 25,000. So now I'm expecting specific strength or momentum in private banks, so that private bank will also cross its previous high and Bank Nifty can cross the level of 50,000. That is the overall view. So yes, we should be buyer if there is any correction in the market.
Okay, buy the dips, and that is something that's really worked very well for most investors, most traders as well in the last couple of weeks. Let's quickly move on and get to our first stock of the day, the stock in focus, and this is, of course, Vedanta. The stock rallied 7 to 8% higher following an upgrade from CLSA. The brokerage firm has upgraded the stock to a buy rating versus a previous underperform rating. It says it has also raised its target price, and it says that Vedanta is probably a good play on the upswing that we're seeing in commodity prices. Hormaz is here with the details. Hormaz, of course, we saw that in Hindustan Zinc yesterday, even Vedanta. I mean, these stocks have been gradually moving higher, but today was a big day.
A big day indeed, and the stock ending at a 2-year high after this move that we saw in today's trading session, and that comes on the back of the CLSA upgrade, as you were highlighting. But CLSA makes some very pertinent points as well in that upgrade. Now, they're saying that the Vedanta is well placed to benefit from this ongoing commodity upcycle, considering the diversified exposure that they have across businesses, whether it be zinc, copper, aluminum, and you can see all these base metals have been rallying in the global markets as well over the last few days. So that is something that has gone well for Vedanta. What CLSA also says is that the company's efforts to raise capacity and profitability across segments will augur well for them in the future, and as a result they are raising their EBITDA estimates by 4 to 13% over FY24 to 26 on higher commodity prices and lower cash cost assumptions as well. Two big triggers that they want to watch out for. One is the demerger that is yet to be completed. You know, they are planning to split the business into 6 entities, and the transfer of the Konkola mine. So these are the two key corporate actions that they are awaiting more details on. And at 5.4 times FY26 EV to EBITDA, which is still lower than Vedanta's historical average of 7 times, CLSA still sees potential for further re-rating as well. As a result, they upgraded the stock to a buy from an underperform rating earlier, and also raised their price target to 390 rupees from 260 earlier. As a result, the reaction 7% higher, 2-year high for Vedanta.
Okay, absolutely. 2-year high for that stock. Doing really well. Thank you, Hormaz, for that. Let's take it to our guests then. Mayuresh, let's come on the fundamentals. Now, it seems that, this has not just been a flash-in-the-pan rally in the entire metals complex. It's sustaining, at least for now. What would your call be on Vedanta at these levels?
Afternoon, Surbi. No, as Hormaz mentioned, I think there are quite a few triggers for the entire space itself. And obviously, I think the concerns for Vedanta a few quarters back were the debt repayment, the bond bullet payments that they were expected to do. To a certain extent, I think they've handled that crisis pretty well. But again, I think the kind of performance that one expects, I think zinc, lead, aluminium, silver prices through the roof, I think this is what is triggering the rally in Vedanta, because it possesses most of the metals which are doing pretty well at this juncture. Now, inventory levels across the metal packs will be at abysmal low levels. So when the China recovery happens at some point of time, if the stimulus comes through at some point of time, so the next 2-3 quarters, as that recovery takes place, as restocking starts happening, LME prices will be on the upswing as well. And that will create that natural operating leverage that is probably required, because volumes will probably go up and higher as well as demand sustains. To that extent, I think the rally within metals, within Vedanta, probably is looking like a cyclical theme that might still continue. It's still an actionable as we see it at Markets with India. So anybody who wants to do a cyclical play, probably Vedanta remains at an actionable level and key pivot point as we see it. Within the metal space, JSW Steel and the non-ferrous space, Hindalco, is something that we are keeping and monitoring on our watch lists.
10-month highs, if 12-month highs, 18-month highs. Vedanta, of course, is up because it's got play on so many commodities, right? So why not get a overall picture as well, away from stocks, pulling back a little bit in the underlying commodities? Manish is going to do that for us. Manish, over to you.
There is a big uptrend that we are seeing in commodities right now. So everything tangible and used in industry is surging on the higher side here. I'll start with gold, which is still holding on its all-time highs. We've seen 2,360 as an all-time high. It's trading very close to that. Silver prices in the global markets are trading at a 3-year highs. But for the Indian markets, it has been yet another day that we have seen an all-time high in silver, this time around at almost 83,000 rupees a kg. Come down to industrial metals, and it has been a big surge there as well. Zinc was tearing in on the higher side in the last 24 hours, and we're trading at a 1-year highs onto this one, above $2,700 a ton. The rise in zinc comes in on the back of mine disruptions in various countries there. That has been supportive. And then take a look at copper, where we are looking at the Shanghai copper trading at an all-time highs, LME copper at a 14-month highs, and the US copper prices at a 16-month high. So every geography that you look at, the copper prices have been gaining. One, the markets are looking at smelter production cuts in China. China. There are mine supply disruptions as well. And then the street believes that the underinvestments in copper and the fact that the demand has started to pick up now can take copper to all-time highs going forward. It was only last year that we saw copper prices hit an all-time high of $10,700 a ton. It's trading at around $9,400 right now, but there are expectations that 10,000 and even 12,000 is what you could be looking at in copper in the next year. Those are the kind of reports that Bank of America, Citi and Goldman Sachs have put out. But move on, and you also are looking at a 15-month highs in case of tin. It's a 2-week highs in case of iron ore prices. In the soft commodities, cocoa is trading at all-time highs, rubber at a 3-week highs, coffee prices at an 18-month highs. So there are various commodities which continue to outperform various other asset classes, with the expectation that as we move forward from here, you could be looking at further support because demand is improving, inventories are declining, there is more hot money flowing into various of these commodities.
All right, Manisha, thank you so much for that. And Prashant, this is when all central banks are expecting inflation to come down, right? When Manisha is saying everything, soft commodities, hard commodities, everything is at near all-time highs or record high levels. But very quickly, before we move to the next stock, Shrikant, come in on this from a stock perspective, from a trading perspective. We've heard the fundamentals now. A fresh trade in any commodity stock, which one would you initiate?
Yeah, I was just like going through with the commodity chart of aluminium, and it was showing that it is going to retrace furthermore from here, maybe at least 5 to 10% from here. So if commodity is going to go up by 5 to 10%, then we can expect similar sort of activity in almost all the shares which are related to that particular commodity. So in that we like Nalco, which is currently around 184, 185. And if we just go through with its pattern, then I think the stock is heading for at least 200 or 210 in next few trading sessions. So it's a buy at current levels around 183, 184, because the stock has now formed very strong base somewhere close to 175. So we can keep stop loss at 175 or 174 for holding long positions or creating long positions on Nalco.
So Nalco is the pick. Let's quickly move on to the other stock in focus today, and that is MCX, which was up almost 6% after Motilal Oswal upgraded it to a buy. The brokerage firm says that new products and variations will be key volume growth drivers for the company. Vamakshi has more details. Vamakshi, fill us in.
Well, absolutely. An optimistic note that has come through from Motilal Oswal on MCX. Like you rightly pointed out, they have highlighted that new products and the variations of the existing ones are expected to be key growth drivers for the company. They've launched steel TMT bar contracts, which could be a large volume generator in the medium term. Apart from that, they've also applied for power future contracts, which are currently unavailable in the market right now, but they see good potential for growth out here as well. They also plan to launch mini contracts on other metal products, and these include mini contracts on metals like copper as well as nickel, and this in turn can help boost their volumes. Apart from that, favorable regulatory measures, if and when they come, would also bode well for the counter. In fact, interoperability of margins as well as rectification of difference in calculation of margins between equity as well as commodity markets could again help in boosting the volumes for MCX. Retail participation also has significant headroom for growth, and they validate this given that MCX currently has only 1.4 million UCCs as compared to nearly 40 million NSE active clients. In fact, over the last few years, they were transitioning their core operating software from 63 Moons to TCS, which hampered their launch of the new products. But this transition was completed in October 23, and therefore they're expecting to see a very high jump up as far as the volumes are concerned. They're expecting 47% CAGR in option volumes over the next 2 years, and as a result, revenue CAGR of almost 28%, EBITDA CAGR of 205%, and PAT CAGR of almost 157% is what they're expecting from FY24 to FY26. So largely the tech overhang is now behind us. There are some near-term potential growth drivers, and therefore they see meaningful re-rating potential in this counter. So given all of those factors, Motilal Oswal has gone ahead and upgraded this stock from neutral to buy. They've given a target price of 4,300 per share.
All right, Vamakshi, thanks very much. And of course, I mean, a lot of those estimates build in new product launches, right? Because that will generate the volumes apart from the already commodities which already trade on the exchange. The other big development, of course, was the mutual fund numbers for the last month. And some changes which are quite notable, especially, the small cap, mid cap versus large caps. Surabhi, tell us more.
Oh, yes, absolutely, Prashant. I guess, March was the month when we got all the headlines about froth in the system and bubble in small caps and the stress test.
It's made a dent.
It has finally made a dent. So if you look at the headline number, that itself is cooled off. The March number the net equity number is lower than the February number at 22,691. Two major reasons. One is this small cap, mid cap, large cap shift. And the second is that the NFO party, the NFO flurry, that's kind of tapered off a little bit as well. So let's talk about this big shift. I'm calling it a shift and not a reset because it's only month one and we need to see the trend. So this is the highest inflow that we've seen in large cap funds so far in FY24, as in the fiscal 24. 2,128, and it's happened at the expense of mid-cap and small-cap funds. Small-cap funds have seen the first outflow of the entire fiscal year, FY24. The outflow is about 94 odd crores, and contrast that to the inflows of 3,000 crores, 3,200, 3,500 crores that these funds were drawing in month on month. Despite the outflow, meager outflow in March, the overall net inflow number for small caps is a staggering 40,000 crores, because that's where the retail rush was gravitating, and that's the reset that the regulator and in fact even the MF industry was trying to achieve. So it seems that in March there's some evidence of that reset happening. What are the other major trends? The SIP number is very, very strong and solid. No complaints there whatsoever. Second month running, SIPs are over 19,000 crores. The number is 19,271 now. As I said, the NFO party that's cooled off, because in February we had some large high-ticket, high decibel fund offerings. So this month's number, and I'm talking about the open-ended funds, all open-ended funds put together, equity, debt, hybrid, etc. That number's cooled off to about 3,827 crores. Last but not the least, if you look at hybrid funds, because again, that's been one hallmark of FY24. Ever since the taxation change happened on debt mutual funds, the hybrid category, multi-asset funds, these are the funds that are being really pushed by the industry. There, the flows have been very strong up until February, but March saw a bit of a cool-off, down to about 5,000 odd crores. ETFs, and as is the case by the end of the year, your ELSS category, the ETF category, typically lots of tax saving happens, and the Employee Provident Fund organization also quickly parks in that money. So those categories have drawn in the money as well. But overall, a bit of a small reset happening.
Absolutely. We'll take a break here. We'll come back with focus on, D Street Chatter. Nimesh helps us with that, the list there. And of course, events to watch when we come back tomorrow. Stay with us.
Welcome back. You're with us on Markets Forward. Another strong day for the market, with the Nifty scaling the 22,700 mark and mid-cap markets doing very well as well. So let's go across to Nimesh and figure out what the buzz was in dealing rooms today. Nimesh, what did you pick up and what's the stock on your radar?
Well, the momentum continues on the upside, and a lot of actually sectors participate in the upside in today's market. And interestingly, even the mid-cap index ended 1% higher. A lot of individual mid-cap stocks were up 8-10%. So big momentum in the broader markets as well. In terms of individual names, the first stock on my list is Anantraj. In the real estate name, this was buzzing. In fact, it's been consolidating off late, but I understand in the multiple block deals today, domestic mutual funds were buyers, so that's the first name. The second name is IEX. Even that was buzzing in trade today on back of strong buying interest. So looks like there will be strong delivery-based buying, and some larger FIs seems to be quite interested in IEX. The third name is Vodafone Idea. Well, the stock is in the F&O band. There is cash-based buying happening for the last many days. I understand a leading US-based hedge fund is an active buyer in the cash market. All eyes will be in the FPO, which can open next week, and there is a very strong demand in the FPO from both HNIs as well as the larger investors. And the last one is HDFC AMC. We saw the mutual fund data today, but in general, throughout the day, there was selling pressure in HDFC AMC. So at record levels, some bit of profit booking is visible in HDFC AMC.
Okay, all right. Interesting list as always, Nimesh. Thank you very much for that. But before we wrap, let's get you a quick list of what to watch out for when we come back, not tomorrow again, on Friday. Sonal is here. Sonal.
Well, that's the first cue. Tomorrow is a holiday, so we'll not be seeing these markets trade tomorrow. But we do have a lot of global cues that we'll be watching out for. First is a lot of economic data from China. It will be the PPI for the month of March and CPI as well for the month of March. For US, the initial jobless claims, the data will come out tomorrow, but markets will also react on Friday on the CPI data, which will come out tonight. So that will be a key event to watch out for Indian markets. The ECB interest rate announcements, which are expected tomorrow, are key to track. And OPEC will also come out with its monthly oil report. So that is something we'll be watching out for. On 12th of April, we kick off earnings season with a big name. Of course, we have a lot of them already, but TCS will be the big one to watch out for. In terms of macro data, Feb IIP data, March CPI data, and the listing of Bharti Hexacom. So these are the key events. There'll be some EGMs as well. So that will be for Coforge and Anup Engineering. So these two stocks on our radar. And lastly, dividend ex-date for 4 main stocks. That will be Moltech Packaging, ASH Kelkar, Vedanta, goes ex-dividend, and Good Luck India. So these are a couple of names and events you should keep on your radar.
Enjoy your holidays, Sonal. Wish all of you guys the same. Have a restful midweek break. We'll see you back bright and early Friday morning. Thanks very much for staying with us here on this edition of Markets Forward. But after a quick break, news and updates will follow. Stay with us.
welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty extend opening gains to end at a record high. Mid-cap index recoups yesterday's losses and outperforms the large caps. After a nudge from SEBI, mutual fund inflows shift from mid-caps and small caps to large caps. Small cap funds see an outflow for the first time this fiscal in March, and large cap inflows are the highest in a year. Inflows into small cap funds for FY24 nearly doubles to more than 40,000 crore rupees despite the outflow in March. Commodity prices continue to surge. Copper hits a 14-month high. Gold is at a record high. Silver at a 3-year high. The Shanghai Exchange imposes trade limits on gold, crude and copper futures. After Moody's, Fitch cuts its outlook for China's credit ratings from stable to negative, raises the red flag on China's public finances being strained by a prolonged property slump and rising fiscal deficit. China's finance ministry says it's disappointed by Fitch's decision. Indian banks report a fantastic FY24. Deposits crossed 200 lakh crore marks, the highest growth in the last 7 to 8 years. Loan growth is the best in 12 years and manages to outpace deposit growth. Setback for Reliance Infra. The Supreme Court sets aside its earlier order that asked Delhi Metro Rail Corporation to pay 8,000 crores in arbitral award to Reliance Infra. The court says the arbitral award suffered from illegality and saddled a public utility with a huge liability. Also orders that all execution proceedings in the Delhi High Court related to the matter should be discontinued. Reliance Infra stock hits 20% lower circuit. Supreme Court refuses to accept an apology from Patanjali's Ramdev and Acharya Balkrishna. Once again gives them a tongue lashing for willfully violating court's orders and issuing misleading advertisements, falsely claiming that their product Coronil can cure COVID-19. Court also rips into the Uttarakhand regulators for inaction and lists the case on April 16th for passing contempt orders. Delhi Chief Minister Arvind Kejriwal moves the Supreme Court, challenging his arrest by the Enforcement Directorate in the alleged liquor policy case. This comes after a setback in the Delhi High Court. Chief Justice D.Y. Chandrachud says the court will look into his request immediately. The Calcutta High Court orders a CBI probe into sexual assault and land grabbing allegations against TMC leaders in West Bengal's Sandeshkhali village. Also asked the agency to submit a report on alleged conversion of agricultural land into water bodies for pisciculture on 2nd May, the next day of hearing. Gaza marks a somber Eid amid the war and starvation. US President Joe Biden calls for an immediate ceasefire, calls Israeli operations in Gaza a mistake. But tensions continue to rise in the region, with Israel threatening to strike Iran directly if it launches an attack from its territory. All right, let's start with the market action. Another day and another record high for the Sensex and Nifty. Markets managed to hold opening gains, with the Sensex reclaiming the 75,000 mark. The Nifty gained over 100 points. Mid-caps outperformed the blue chips, and the index managed to recoup all of yesterday's losses. The bank stocks continue to gain, with the Nifty Bank index moving closer to the 50,000 mark. All right, shifting gears now. Mutual fund inflows have shifted away from small and mid caps to large caps in the month of March. This comes after the results of SEBI's mutual fund stress tests, which were published last month. My colleague Surbhi Upadhyay is here with more. Surbhi, take us through the fund flows.
Well, March really has been quite a month for the mutual fund sector, because finally we have an understanding that a bit of a shift, I call it a shift and not a reset, a shift which the mutual fund industry, which the regulator itself have been batting for, that seems to be happening. That is, funds are coming in, but now after 11 months, they're coming into the large cap space. But first, the main number, the number for the month of March, the net equity number itself is lower than February by about 4,000 crores. The number stands at 22,691. This because of the shift that I'm talking about, as well as the fact that the NFO party, that has tapered down a little bit, and I'll come back to that in just a second. Let's talk about this change between mid-cap, small cap and large cap. For the first time in this entire fiscal year of FY24, small cap funds have seen slight outflows, just about 93 crores, which is actually paling in comparison to the total inflow of 40,000 crores that small cap funds as a category has received. But there is an outflow, and the money seems to be moving away from mid caps and small caps into large caps. The large cap category has drawn in 2,128 crores. That's the highest inflow in large caps that we have seen in FY24. Even in mid caps, the numbers have come down from 1,800 odd crores to about 1,000 crores. Let's move on. The other picture is very solid, and that's intact, and that's the SIP picture. Second month running, SIP inflows have crossed the 19,000 crore mark, 19,271 crores to be precise, slightly higher than what we saw in the month of February. NFOs, new fund offerings. Well, in terms of open-ended funds across equity, hybrid and debt, 19 offerings came in March, and they pulled in close to about 3,800 crores, which is a far cry from the 11,400 odd crores that this category, the NFO category, was drawing in, because there were some very big high decibel launches in February, which were missing in the month of March. Talking about some of the other trends, it's the end of the year. So what is usually the case happened once again in FY24. That is the ELSS category, the tax saving funds category. That's pulled in close to 1,800 odd crores, much higher than February. And also the ETF category has pulled in over 10,500 crores. That's because typically a lot of the investments that are coming in from the EPFO, the Employee Provident Fund Organization, they typically happen in later. So that bulk of that money goes into ETFs, and that perhaps pushed up the ETF number to 10,500 crores positive. Overall speaking, I mean, mutual funds, the total assets under management are still very, very solid at over 54 lakh crore rupees, just about 53.5 to 54 lakh crore rupees. That picture hasn't changed, but the reset is happening. The question is this just because of the stress test that happened, because of the market correction that happened, and all this talk of froth and bubble, or whether this is a new trend, whether from here on investors will perhaps go back to choosing large caps over mid caps and small caps? Well, the answers will unravel themselves in FY25.
Right, thank you, Surbhi, for that comprehensive update. Moving tracks now. Fitch has downgraded its outlook on China's long-term foreign debt to negative from stable. The rating agency cited the rising economic uncertainties in the country and its transition to a new growth model following a property crisis as the reasons for the downgrade. Fitch expects China's explicit central and local government debt to rise to 61.3% of the GDP in 2024 from 56.1% in 2023. In December 2023, Moody's too downgraded China's credit outlook to negative. Onto the commodities market, where the uptrend in prices continues, with gold hitting new all-time highs every day. This after Shanghai International Energy Exchange implemented trading limits on gold futures. Base metals prices also saw a sharp rise in a broad-based rally. The boom in commodity prices also helped metal stocks clock gains in trade. Manisha Gupta is here with more.
There is a big uptrend that we are seeing in commodities right now. So everything tangible and used in industry is surging on the higher side here. I'll start with gold, which is still holding on its all-time highs. We've seen 2,360 as an all-time high. It's trading very close to that. Silver prices in the global markets are trading at a 3-year highs. But for the Indian markets, it has been yet another day that we have seen an all-time high in silver, this time around at almost 83,000 rupees a kg. Come down to industrial metals, and it has been a big surge there as well. Zinc was tearing in on the higher side in the last 24 hours, and we're trading at a 1-year highs onto this one, above $2,700 a ton. The rise in zinc comes in on the back of mine disruptions in various countries there. That has been supportive. And then take a look at copper, where we are looking at the Shanghai copper trading at an all-time highs, LME copper at a 14-month highs, and the US copper prices at a 16-month high. So every geography that you look at, the copper prices have been gaining. One, the markets are looking at smelter production cuts in China. There are mine supply disruptions as well. And then the street believes that the underinvestments in copper and the fact that the demand has started to pick up now can take copper to all-time highs going forward. It was only last year that we saw copper prices hit an all-time high of $10,700 a ton. It's trading at around 9,400 right now, but there are expectations that 10,000 and even 12,000 is what you could be looking at in copper in the next year. Those are the kind of reports that Bank of America, Citi and Goldman Sachs have put out. But But move on, and you also are looking at a 15-month highs in case of tin. It's a 2-week highs in case of iron ore prices. In the soft commodities, cocoa is trading at all-time highs, rubber at a 3-week highs, coffee prices at an 18-month highs. So there are various commodities which continue to outperform various other asset classes, with the expectation that as we move forward from here, you could be looking at further support because demand is improving, inventories are declining, there is more hot money flowing into various of these commodities.
Thank you, Manisha, for that update. Vodafone Idea will likely launch a follow-on public offer next week to raise between 18,000 crores to 20,000 crore rupees. As per a report by Money Control, the cash-strapped telecom company has already secured commitments from anchor investors, including both foreign and domestic institutional investors. The proceeds from the offering are expected to provide much-needed liquidity to the company. Sources also told Money Control that Vodafone Idea has enlisted Jefferies, SBI Caps and Axis Capital as lead managers for the FPO. Apple has doubled iPhone production to $14 billion in India, including the last fiscal. According to a Bloomberg report, 1 in every 7 iPhones was assembled in India. Foxconn assembled nearly 70%, followed by Pegatron with 17%. The remaining iPhones were made in Wistron's plant in Karnataka, which was taken over by the Tata Group last year. The big story we are tracking, the Supreme Court has refused to accept an apology from Patanjali's Ramdev and Acharya Balakrishna once again. While hearing a plea by the Indian Medical Association, the court gave Ramdev and Balakrishna tongue lashing for willfully violating court's orders and issuing misleading advertisements, falsely claiming that their product Coronil can cure COVID-19. The court also pulled up the Uttarakhand regulators for inaction. Ashmit Kumar is here with more.
Well, it was a tough day in court for Baba Ramdev, made to appear in person before the top court for the second time before the top court. And what's interesting is that the apology had been tendered. A second apology had been furnished by Baba Ramdev on the 6th of April. The Supreme Court, however, will not have any of it. The Supreme Court said that we will show this apology the same disdain that Baba Ramdev had shown the order. Keep in mind that the Supreme Court order with respect to restraining of advertisements of these products which claim to have medical cures was not respected, was not complied with. In fact, the Apex Court frowned on the fact that the very next day after the Supreme Court issued the direction, Baba Ramdev hosted a press conference and was quite blatant about going ahead with those advertisements. And that is something that the Apex Court said cannot be undone by even 4 or 5 apologies, that the Supreme Court will not have any of it, that it's the apology is not worth the paper it's been written on. And then going on to say that it will begin to take contempt action, and to that end, April 16th is the date that has been set where the Apex Court will launch further proceedings against Baba Ramdev as well as Patanjali Ayurved. But the Apex Court did not stop there. It was extremely unhappy even with the state licensing authority of Uttarakhand. The question being asked by the Apex Court is why no action was taken against Patanjali despite repeated violations for a better part of 3 years. Was there thumb twiddling going on? Was there dereliction of duty? Why no FIR? Despite the centre flagging various violations. In fact, at one point, the Apex Court even observed, and I quote here, that we will rip you to pieces. Again, those are words falling from the Apex Court itself. So questions being asked of the state licensing authority as well. Clearly, the Apex Court is upset, launching contempt proceedings. 16th now will be the date to watch for. That's when we expect the Apex Court will pass orders against Baba Ramdev in these contempt proceedings.
Right, Ashwin, please stay on with us. So the Apex Court has also set aside its earlier order that asked Delhi Metro Rail Corporation to pay 8,000 crores in arbitral award to Reliance Infra. The court ruled that the arbitral award suffered from illegality and saddled a public utility with a huge liability. Could you share more details on this, please?
Well, curious developments, at least as far as this arbitral award is concerned. Just to give our viewers the benefit of context, 2017 is when this arbitral award was passed. It was passed in favor of Reliance Infra. That arbitral award had to be paid by DMRC or Delhi Metro. And therein lies the question as to whether or not a public utility can be saddled with such a burden. The answer to that was an overwhelming yes by the Delhi High Court and then subsequently by the Supreme Court. The Supreme Court earlier in 2021 had very clearly held that this arbitral award is good. And over the years leading up to 2024, that arbitral award with the interest component has added up to 8,000 crore rupees. Now the Supreme Court, as of this morning, has done a U-turn. The Supreme Court has set aside its earlier order, saying that it suffered from illegalities. The arbitral award suffered from illegalities, that a public utility such as Delhi Metro cannot be thrown, cannot be cast with such massive liabilities, that would be a miscarriage of justice. And to that count, has observed that it needs to undo the damage that the previous order did, and that this arbitral award needs to be set aside as illegal. So with that in mind, the Supreme Court has passed a pointed direction. Number one, the arbitral award set aside. That's the big takeaway. The other is that any execution proceedings in the High Court will have to be discontinued, that any amounts that have been paid by DMRC to Rel Infra will have to be returned. So a strong order in a curative application by the Apex Court, undoing the pain that DMRC was anticipating.
All right, thank you, Ashmit, for these updates. The National Stock Exchange has cautioned investors about deepfakes of the exchange's MD and CEO, Ashish Kumar Chouhan. This after an AI-generated video of Chouhan making stock recommendations was circulated widely on social media platforms. The NSE has initiated an investigation to trace the origins of the video. It has also said it's collaborating with law enforcement to find the perpetrators. In a bid to ride the AI wave, Wipro founder Chairman Azim Premji is amping up its bets on tech firms. As per a report, Premji's fund, Premji Invest, is likely to invest $50 to $70 million in Australian graphic designing platform Canva. This is part of Canva's secondary market sale, where shares worth over $1 billion changed hands at a valuation of $26 billion. Premji Invest may reportedly take shares tendered by employees in this sale. Last month, Premji Invest took part in Hippocratic AI's $53 million Series A funding round. On to the global headlines that we're tracking. US President Joe Biden has warned that Israeli Prime Minister Benjamin Netanyahu's approach on Gaza is a mistake. He also urged Israelis to push for a ceasefire. Meanwhile, Israel has claimed it's moving aid into Gaza more rapidly. It said that over 460 aid trucks were sent into Gaza on Tuesday, the highest since the conflict began. However, UN officials claimed the Israeli count was inflated because the trucks were only half full. Russia has claimed that Ukraine attacked the Russian-controlled Zaporizhzhia nuclear plant for a third day. However, Ukrainian officials denied that Kyiv had anything to do with these attacks. The United Nations Nuclear Board will hold a meeting on this matter tomorrow, following a request from both countries. World's top chip maker, Taiwan Semiconductors manufacturing company, has posted its fastest monthly growth in 2 years in March. Its revenue for the month came in at over $6 billion, surging more than 34% on a yearly basis. The speculator growth comes on the back of high demand from AI apps. Earlier this week, TSMC received over $6.6 billion in grants from the US government for chip production in Arizona. All right, it's time for a short break, but coming up next, Indian banks report a fantastic FY24. Deposits cross 200 lakh crores, marks the highest growth in last 7 to 8 years. More details when we return. Welcome back. You're watching Business 360. Delhi Chief Minister Arvind Kejriwal has moved to Supreme Court challenging his arrest by the Enforcement Directorate in the liquor policy case. This comes after the Delhi High Court rejected his plea against the ED remand, saying that it was not illegal. The Chief Justice of India, D.Y. Chandrachud, said that the court will look into the request immediately. Kejriwal is in judicial custody till April 15th. Prime Minister Modi campaigned in Tamil Nadu for the second day in a row. The BJP is contesting the elections in an alliance with the smaller parties, including those headed by TTV Dinakaran and S. Ramados. Speaking at a rally in Vellore, the Prime Minister said that the DMK wants to keep the state trapped in old thinking and old politics. The BJP also announced Lok Sabha candidates for some more Lok Sabha seats. Veteran leader S.S. Ahluwalia will contest from Asansol, a seat that Bhojpuri actor Pawan Singh had opted out after his name was announced initially. Ahluwalia will be facing Shatrughan Sinha of the TMC and CPM's Jahanara Khan. The BJP has also replaced two-term MP Kiran Khair in Chandigarh. Sanjay Tandon will be contesting from the seat instead. The Congress is yet to make a formal announcement on their candidate. The BBC will split its operations in India into two separate companies after raids by the country's tax authorities last year. The British broadcaster will form an independent Indian-owned company called the Collective Newsroom. The company will produce content for the corporation's 6 regional channels. The BBC has applied to have a 26% stake in Collective Newsroom. A smaller team making content for the BBC's news entities headquartered in the UK will remain in India, working directly for the broadcaster. FY24 was an impressive fiscal for Indian banks as their cumulative deposits crossed 200 lakh crores, marking the highest growth in last 7 to 8 years. Also, banks' loan growth, the best in 12 years, was higher than the deposit growth. Abhishek Kothari with the banking report card.
Well, in FY23, banks saw record net interest margin, lowest credit costs and best ever return ratios. Records gathered in FY24 for banks with respect to the business momentum, that is deposits and advances growth. Now, deposits crossed the rupees 200 lakh crore mark in this fiscal. Deposit growth in FY24 has been one of the highest that you are seeing in last 7-8 years or even more. There is no debt to deposits. It's actually the fast pace of loan growth which has meant that the incremental deposit requirement is pretty much on the higher side. X of SDFC Limited, deposit growth for the banking sector was 12.9% YOY in FY24, one of the highest that you are seeing in last 8 years. With SDFC Limited numbers, deposit growth has been around 13.5% in FY24 on a YOY basis. That is one of the best in last 10 years. Now, loan growth has been robust as well. Even without SDFC Limited number, growth has been on the healthier side. Loan growth for the banking sector has been one of the highest that you are seeing in last 12 years without SDFC Limited numbers, and 13-year high with respect to the loan growth on a YOY basis even with SDFC Limited numbers. So loan growth for the banking sector was at 20.1% YOY with SDFC Limited numbers. This is the best that you are seeing after 21.55% YOY record that you saw for the banking sector in FY11. X of SDFC Limited, the loan growth was a 16.24% YOY in FY24. That is the highest that you are seeing after 17.1% YOY growth that the sector recorded in FY12. So credit to deposit ratio of the banking sector touched 80% for the first time ever. Now, credit deposit ratio has been on the higher side as loan growth has been massive in last 2 years. In fact, the last time system deposit growth outpaced the loan growth was for the fortnight ending 8th of April 2022. Even if you exclude SDFC Limited's numbers, the credit to deposit ratio of the sector is the highest that you are seeing in last 12 years. So CD ratio or credit deposit ratio X of SDFC Limited is at 78.09% in FY24. Now, this is the second highest CD ratio in last 13 years. CD ratio was at 78.1% in FY12. So entire fiscal year, M3 growth has largely been in double digits between
10% to 12.5%. So first time around in 3 years that you are seeing double-digit growth for M3 entire year. Deposit to M3 ratio has been one of the highest in recent times, at least in last 5 to 6 years or even more. So in terms of outlook, credit growth may come down if banks focus more on deposit growth in order to reduce their credit deposit ratio to RBI's requisite levels. Banks say July or August will be litmus test for the banking sector with respect to deposit flows into the system. Deposit growth may continue to come in at elevated cost for the banks till H1 of FY25. Banks say deposit and advances will see double-digit growth in FY25 as well.
Right, thank you, Abhishek, for those updates. With that, it's a wrap on this edition of Business 360. News and updates continue right here.